Welcome back to my channel, Value Investors. In this video, I'm going to be covering Kroger, the big grocery company. And they announced their earnings today, March 7th, and it was well received by Wall Street. Their stock's up more than 8%. And there's reason for it. This is a really well-run company. They execute very well. They do what they said they were going to do. They really execute exceptionally well. It's also a steady stock, really good for my income portfolio. They pay a dividend. It's not the biggest dividend you've ever seen, but they really buy back shares. And I'd like to update my analysis based on their earnings release and a full year of financials that I've got to work with and see where I think the company should be valued and compare it to the current stock price to make a decision whether buy more shares of Kroger, just keep the shares that I own, or potentially sell the shares that I currently own. Let's take a close look at Kroger. Understanding the Kroger business is pretty simple. It's a supermarket, and I can't think of anybody who hasn't been to a grocery store to buy food. And they've been a grocer for a long time. The company's headquartered in Ohio. This is what they've done for 100 years, and they've done it well. They continue to grow and have all the different regions of the US covered by their grocery stores. What I really like about the company is that it certainly seems and they act in a way where they're in partnership with the stockholders. They clearly communicate to stockholders the value that they're going to provide to the shareholder. They execute their business really well, and that's really a compliment to the company. They are communicating in their investor deck that they like returning to shareholders 8 to 11%. Again, this isn't like Nvidia where you're gonna triple your money in 9, 12 months. It's a real steady stock and a really good stock for my income portfolio. So I like that about the company. It's my expectations of the company again are just for steady, gradual increases in the profit price and the stock price and a good dividend over time. The company's using their footprint of grocery stores to expand into fuel sales. So selling gasoline, since they already have a real estate footprint across the country, they can diversify into fuel sales. Since they have grocery stores, they can also operate pharmacies inside of the grocery store, which makes it convenient for a shopper to get their prescriptions while they're picking up some groceries as well. They are also really growing on the digital side. No big surprise. Food delivery, grocery delivery is huge now. And Kroger continues to really evolve and really adapt to the way that customers want to buy their groceries. I think 10% of their sales are done in a digital format, and it continues to really grow, which is great to see. Let me review the fundamentals of Kroger. To begin with, it's a $35 billion company, and their revenue is 147 billion. So it's a grocery store, so they don't have huge margins. That's why you see that their revenue is much higher than their market cap. Their earnings per share are good. Their forward PE is 11.7. That's phenomenal. And the S&P, as an example, is at 26 forward PE. So Kroger is well below the mean on forward PE. And I think it is a signal. That's why the stock is really going off the charts today. Is that investors are realizing that this is a really well-run company, and their PE is super low. If we have a recession, this is the right industry to be in. Groceries, no matter if it's a good economy, bad economy, we have to eat. So, Kroger should not have a big drop in revenues anytime soon. They'll just steadily continue to grow. Over the last year, the stock's up 16%. And again, recently, especially year to date, the stock's just really done well in my portfolio. It's great to see that the stock really rally. Kroger is trying to acquire Albertsons, which is another grocer, smaller grocer, and then it'll make them larger. I think strategically they see that, Target and Walmart, they're becoming threats to their business because both of those companies that I named were retailers. They retailed really, consumer goods, apparel, TVs, and so forth. Now they're getting into groceries, which is really coming into the industry of Kroger. So they see that they have to continue to get larger so that they can compete against those big retailers. And that's the reason for the acquisition. Now, they've had a lot of pushback from the Federal Trade Commission, who has really argued that this acquisition could be bad for the consumer, that Kroger would then have a lot of power to increase prices and price gouge and all that good stuff that they like to, probably enhance and make it a little too dramatic. Um, Whether the acquisition happens and they acquire Albertsons or they don't, I don't think it's going to have a big effect on the Kroger stock. I would like to see the acquisition happen because I really believe in Kroger. Their management team has been executing for decades, just a really, really well run company. And if they believe that this is the right strategy for the company, I'm completely behind it, but would totally understand if the government stands in front of them and they have to abandon the acquisition. So be it. I think we'll move on and Kroger just continue to organically grow. Kroger is providing guidance for the new fiscal year, and they're guiding for really good earnings per share, $4.30 to $4.50. Kroger tends to exceed expectations. So, as I've learned with this company is if I want to be really conservative, I go on the low end. If I want to be realistic, I go with the high end. Free cash flows, same. They guided 2.5 billion to 2.7 billion free cash flow. Last year, they guided under similar numbers, and they ended up coming in close to $2.8 billion of free cash flow. So they exceeded expectations by a little bit on the upper end of that guidance. So overall, I really believe these numbers, and I'll use them for my valuation. I really like Kroger. I like their story. I like their management team. But a story without numbers, it's just a fairy tale. We got to have numbers in order to know, am I buying into a good investment? So I'd like to look at Kroger and value the company based on the cash flows they're going to produce in the future, and look at the earnings per share and value the company on earnings per share, have a blended valuation, and then see if the stock price is currently being sold at a premium or at a discount. Let's take a close look at cash flows first. So they guided cash flows to between 2.5 billion and 2.7. I'm going to take the midway point. I think that's conservative. Again, they tend to overachieve on the numbers they put out there, but let's go conservative. And I'm going to grow those cash flows by 7%. They have grown the cash flows over the last 5 years by 12%. So 7 should be a good number. After that, since it is the grocery business, I'm only going to grow future cash flows beyond year 4 by 3%. I'm going to discount all those cash flows by 8%. They have a strong balance sheet. And I get a value of all those cash flows of $54.1 billion. I'm going to add the cash on the balance sheet and take away debt to get to an equity value of $43.8 billion is the equity value that I see for Kroger. The market cap is $36.3 billion. So overall, there's about a 13% discount available on Kroger stock. Earnings per share, I'm taking the higher end of the earnings per share, going against a 16 PE and growing those earnings by 3%, which is conservative. And I get to a value per share of $61.38. The current share price is $54. So there's about a 13% on earnings per share. So blending is easy. It's 13% discount. And this is a very fair price for a very good company. So I like that the fact that the company stock price has been rising. I think stockholders are taking notice. This is a solid company, but it starts with a really good company. So let me summarize my review of Kroger and make a decision on whether I should buy more shares, hold, or sell my shares. Starting with the company, I think very highly of the company. I like the business. It's the grocery business. It's a good diversification play in my income portfolio to have a food grocer. Very stable. I like the business. And same thing with the industry. Their management team, I would argue, in the grocery business, no management team is better than Kroger's management team. Their balance sheet is very healthy. Their debt is well below 3 times EBITDA. And they offer a discount on their stock. So I'm going to be a buyer and a holder of Kroger stock. I buy on pullbacks. The stock's really run up today. It's up about 9%. And it's great to see that. It's a pretty good size holding in my portfolio. So it's great to see that big, gain for the day, but it's not a good day to buy stock. I think it'll probably settle down and I will be buying more shares on pullbacks. Kroger is a steady company, just a solid company that isn't going to cause too many problems for my portfolio. It's rare if they ever surprise me, which is a very good thing with companies. They just do what they said they were going to do. They execute really well. And I really like that. I continue to put more money into Kroger year after year. And I've built up a really big position in Kroger, and I'm glad I did so. I hope you found my video interesting, and I really appreciate you watching.